A lot of people had a sigh of relief yesterday afternoon. The Reserve Bank keeping interest rates on hold at 4.35%. That's been now at that rate for 7 months straight. Andrew Barker is a senior economist and at the Committee for Economic Development of Australia and is with me now. Good morning. Have I got you there?
Yes, hello
Oh,
Susan, good
hello,
morning.
hello. Good morning. What are some of those key factors that have gone into this decision from the RBA?
So as you mentioned, the Reserve Bank chose to leave rates on hold at 4.35%. But what was interesting was in the press conference afterwards, they mentioned that a rate rise had been discussed, but a rate cut at this stage had not been discussed. So a rate rise was on the table, but they chose to leave rates on hold. And the key consideration here is that there were 13 successive rate rises, as everyone's well aware, and that's been successful in slowing the economy and bringing inflation down, but it hasn't come all the way down to the Reserve Bank's target band of 2 to 3%. It's still about 1 to 1.5% above that, and inflation is easing more slowly than the Reserve Bank had expected, so that's why they're not prepared to cut rates yet.
So each time, as you said, the RBA board does make that monetary policy decision. They do release some commentary. They have a media release around that. Was there much that sort of shocked you or that stood out to you from that, what in the media release, and also what was said in that post decision press conference?
Look, the most interesting thing for me was, as I mentioned, that a rate rise was on the table, even if they decided not to go that way at this meeting. Also, there was some language in the media release, which, as you mentioned, they put out the statement each time there's the board meeting. They reinserted some wording that the bank will do what is necessary to return inflation to target. And this was the first time since the February statement that they'd made that comment. And that's been interpreted as a tilt towards the greater possibility of increasing rates in future, indicating the bank is more concerned now about how slowly inflation is returning to target.
Andrew, I'd like if you can, in very simple terms, to share a little bit more about interest rates and the inflation that we hear so much about and why that is such a key part of the conversation and what factors go into that.
Sure. So the challenge for the Reserve Bank is that they increase interest rates to reduce demand in the economy because there's more incentive for people to save, or for people who have a loan, then they don't have as much money to spend. So that takes some of the heat out of the economy and that brings down inflation. And the Reserve Bank's talking about following a narrow path between bringing down inflation and not putting up inflation putting up interest rates too far, too fast, so that has too big of an effect on the economy and pushes up unemployment. And the Reserve Bank has noted that they're still on that narrow path. The Australian Reserve Bank, of course, has not raised rates as much as some of our international peer countries like New Zealand or Canada, or the US.
Hmm. You're hearing from Andrew Barker, a senior economist at the CEDA. As somebody with a mortgage, just like many people right across regional Queensland, when I see in those notes things about the outlook remaining highly uncertain, that's very worrying. And in addition to some of what you've shared this morning, if you had to make an educated guess, would you assume that or predict that they're going to be increased later this year?
So we don't think that the Reserve Bank will move rates this year. So that's the good news. We're not expecting an increase. So markets are pricing in a 10% increase of a rate rise at the next rates decision in August, but more likely than that is another hold. So from the start of July, Australians are going to have some extra money in their wallets. That's the more good news with the stage 3 tax cuts and electricity bill relief, even more so here in Queensland. And the big question here is how much of that money will be saved and how much will be spent pushing up demand and therefore putting upward pressure on inflation. So the Reserve Bank will be watching that very closely, and then the chances of a rate change increase later in the year as they see what happens. And we're hoping to see a rate cut early next year.
What sorts of things can us mere mortals do to make a difference when it comes to this rate?
Uh, Look, what matters is aggregate demand across the whole economy. So as individuals, obviously you can't have a big effect on that. And what's really more important is managing your own finances, trying to get making sure you're getting the lowest rate you can get from your bank, making a decision whether to lock in rates if that takes away some of the uncertainty and the stress around that. So it's more managing individual finances that individuals can do. And what the Reserve Bank really tries to do is manage that aggregate picture to make sure we don't have too much money chasing too few goods and services.
Andrew Barker, senior economist at the CEDA. Before I let you go, I wonder, do you remember your first push bike?
I do. It was yellow.
Yeah.
It was very small, but it was the sense of freedom. It was so exciting. And I also remember my first push bike when I spent some time living in London. And just again, that sense of freedom of being able to get around the city. I think it's fantastic.
Go exploring. Andrew, thank you so much for your time this morning.
Thanks, Susan.